Hello, everybody, and welcome to another episode of J for His House. On today's episode, we will be discussing about Fibonacci levels and how to use that on SMC. And now, I believe you all have heard about the Fibonacci tools, and some of you might have been finding difficulties in understanding how to use the Fibonacci levels and how to actually make this usable when it comes to smart money concepts and not just trading Fibonacci. Because as you all know, Fibonacci is a system on its own, and this also requires time and patience when it comes to understanding how to master these levels and how to take trade from them. But at the same time, there's also a similar way to use this on SMC, but makes it more simplified and also helps you to actually navigate your way around the Fibonacci tools and also still use your regular SMC patterns and also your SMC confirmations like liquidity and breakup structures. But now, as you all know, Fibonacci level something that's very familiar with supply and demand, right? And then when it comes to supply and demand, we know how this works, right? This leads us back to structure and range and internal structure, which all those have their own separate videos on the YouTube channel, which you can check the channel below and also see if you find something interesting to learn from, all right? So you could give us a subscribe and also hit the notification button to get notified whenever we have a new video coming up. And you can also check out our Telegram channel, which we do share daily analysis to also help you throughout the day. Also give you some really good signals out there for free on how to use, SMC and stuff like that. So you could check the description below for the link if you're interested in joining our Telegram community. Now, moving on, we would be discussing about the range when it comes to using Fibonacci. As you all know, you need to have a proper understanding on how to use a range because this has a very big role when it comes to using the Fibonacci levels. It also helps you to understand which part of the range you should pay attention to. Although I know you all understand the premium and discounts, and then I believe with this already, right, you already know where to pay attention to when it comes to trading the range. But now this is more simplified and also gives a bigger confidence when you add the knowledge of the Fibonacci into this. All right, so we have the discounts and the premium. All right, so when it's priced on the downtrend, which we can see clearly here, we had a breakup structure, and then we're expecting price to return back into premium, right, to give us a new entry to ride price back down to the next breakup structure, which is clearing at the next external low. But now, as we all understand, we don't know which part of premium is going to be the most valid. We have the breakup block, which is located right here. And then we also have the order block, which is mostly located at the extreme part of the range. But sometimes we do see a fair value gap around this point. And then we see price reacting from that fair value gap. So how do you actually know where in particular you should pay attention to and not miss out on the trade? Although we do have the lower time frame confirmations, which you can actually use that to give you a more persist entries, which I would actually recommend you do. But if you're looking for an extreme entry, which is more like an aggressive, and you would like to know which part of the range should be more likely to give a reaction, so you could catch, a good clean to 30 to 50 pips from that, you could actually use the Fibonacci levels. Because when you do use the Fibonacci, this gives us a little confirmation on what levels of the range we should expect a reaction to. Now, as you'll see, I do have my own settings on my Fibonacci levels, and which you can see on the screen right now. If you like to copy that, you can have that as well on yours. We have the 0.618 Fibonacci level, which is the blue line you see right here. Let me take some of these stuff out so it's easier for you to understand what I'm doing. All right, so we have this. And now how do we know which part of the range to pay attention to? Knowing we have multiple POIs within the premium zone, and we are expecting a reaction from that point. Now, using the Fibonacci level, as you can see, we have some levels which are painted in green, some in black, blue, and red. And now, these levels, as you can see, I don't have any below the discount because, when I'm trying to trade, I'm actually expecting price to retrace into premium on a sell, right? And then if I want to do this for a buy, I bring this arrow here, and then I take this one up. See the flip? So now what I'm expecting is, price to react from here, and then right back up, right? So this is for the uptrend, and then the other way around is for the downtrend. So you don't really need to, have all those other figures placed out so you don't get confused. This makes your Fibonacci looks more easier and also more understandable. Now, how do you use the Fibonacci on your range? How do you actually use this? Now, let me show you guys how I use this on the buy. So we say we had a downtrend. Then we see a reaction and price break structure, right? So now this is a break of structure, and then this becomes manipulation, right? So we have a QM. So this is like a QM being formed. And then we want to expect price to return back down into discount of this range. Now we have premium, this point. We have discounts. This point. Now, if you don't really know how to use the discount and premium sections, you can also check the videos on the YouTube channel. We do have a video which explains a more in-depth knowledge of premium and discounts. Okay, so this is mainly from Fibonacci, so I'm not going to break that down manually, so to spare the time. And as I believe you already know how premium and discount works, because this is kind of like a very important aspect of smart money concept. Okay, so if you want to learn how to use the Fibonacci, I believe you already know smart money concept, because you're trying to use Fibonacci on the smart money strategy. So if you don't really know how to use smart money concept, yeah, there are a lot of videos on the YouTube channel which would also help guide you through your ways and keep you on the right track so you don't get distracted with the terminologies which we have out there. Now, using this, you can see obviously this is a discount zone. As you can see, if we are on the sell, we are expecting price to return into premium. But if we're looking for a buy, we're expecting price to return back into discount to give us a reaction back up. Now, what do we do? How do we have, before we go into picking POIs or understanding that we have an obvious open option where price could give you a retracement into discount, we can use the Fibonacci levels. Now, using the Fibonacci levels, we place that from the low, which caused the manipulation, which we have this, to the high, which was newly created. Right now, on this, we might be seeing something like this already happening, but this was the high which was created, right? Now, we use our Fibonacci tool from the low to the high. Remember, we're looking for a buy, so we'll be doing more of this. Now, from the 50% and above, that's premium. Okay, from the 50% and above is premium, while from the 50% below is known as discount. Now, you want to make sure you have your Fibonacci placed properly, and then you want to expect price to return into discount. Now, on the discount, you see some painted with green, black, and blue. I just explained the red for you. This is the equilibrium level, which separates premium from discount. So you're expecting price to go below this zone to give us an entry. So this is not a buy zone. This is no way a buy zone. This is a reaction zone. This is a watch zone. This is where we want to see what happens. From anything below this zone is an entry opportunity. All right, but anything above this is liquidity. Now, on the second line, we have the 0.618 Fibonacci level, which is more like the retail level. Now, most of the times we have resistance being formed at this point, which actually attracts a lot of support and resistance traders, which get them more confused. So basically what I'm saying is that the 61 Fibonacci level is more of an inducement zone, all right, so it's liquidity. So when price returns to react from this, or we see a reaction from this, it's more like price bidding liquidity to go lower. All right, so we have the 0.71 or 78 Fibonacci level. This level I got from the ICT OTE. So right, so the OTE level is more like similar stuff to this, but not using Fibonacci. And so this is like a more simplified way of using that, but using it as a confluence of SMC. All right, so the 61 Fibonacci level is also an entry opportunity, but it's not likely to last for long because we do know price is just inducing sellers into the market. So there's likely to be an accumulation being formed at this point, and where we want to see price to move lower. So either into the OTE level or the 0.85 to 89 Fibonacci level, which for me, I'm picking the 89. So this is like the extreme POI. Most of the times we have other blocks being placed at this point. So when you see an order block placed at the 89 Fibonacci level with price reacting to the 61, it's likely the price is going to be reacting from the OTE level or the order block. Now the OTE is mostly on a fair value gap. Like I told you guys, it's like an ICT entry zone. So it's mostly on a fair value gap, and the demand zone is directly below it, which is more like the 0.89 Fibonacci level. And then above that is where the accumulation is being formed, which is from the 51 to the 61 Fibonacci level, which is known as the accumulation zone. So we want to see manipulation of price lower into either this or a bit lower into testing the 89 Fibonacci level. Now, how do you have your confirmation on which price is going to be testing? We don't know, but we know that these are the two most significant levels in the market. And if price mitigates your OTE level without mitigating the 89, you do also know that there's a possibility that price could return back down. And instead of a retest, you get a stop hunt into the 89 Fibonacci level before price starts shooting back up. But Fibonacci gives you a more confidence to know which part of the range to pay attention to and minimize the focus into just a specific number within discounts where you should pay attention to. Now, let me show you guys this on the live chart so we don't waste more time. So this is a range we have from this high to this low, all right? And clearly, you see we had a bit of structure here, all right? And then we had manipulation of these highs, price clear liquidity from all these highs. And then we had price give a change of factor from this low. Right? So we had a bit of structure here. Honestly, guys, if you do want to have my setups, they are all for free. You could join the Telegram channel and the link in the description where I do share my analysis on a regular and also the players as well. Right, so this is like a clean setup, right? This is like the what price action did, the order flow, smart money order flow, we can see clearly within this range. And now we want to see a reaction or want to get a POI from this point, from here to here. Let's say we had this and we are looking for a POI from this range, from this high to this low, which breaks structure, right? So instead of me going over which high to pick within the range, if I should pick this internal high, it's my stop hunt, stop loss, or this, it's easier for you to use the Fibonacci, which also helps you to know which points you should pay attention to and where you should not. All right, so using the Fibonacci tool, we place from the high to the low. Now this you can see clearly price came to what? The 61 Fibonacci level. All right, so you see 61 Fibonacci level was tested over here. And when price did test the Fibonacci level, we did get a reaction. Like I told you guys earlier, we don't expect this reaction to last for long because it's kind of like price inducing either the OTE level or price inducing the 89 Fibonacci level. And as you can see over here, the OTE level was actually tested. So this POI was actually tested before price went back down. So this was likely like an old high, which is an internal high, inducing the 89 Fibonacci level. But then let's not use that confluence. Let's use the confluence of what price did, after the range was created. And then you can see, obviously, once price tested the 61 Fibonacci level, price gave a retracement back into the newly formed range. Now on this range, we are from this low to this high, which is like the counter range. Using this, you can see, obviously, price returned back down to test the OTE level. All right, so the OTE level was tested. I told you guys that entry would be on the 89 or the OTE level. And as you can see, obviously, the 89 was also tested before the range was created. But that's not the confidence I'm giving you guys. All right, that's not what I'm teaching you guys. Probably in a previous video or a next video, I might be teaching that. But for now, this is what I have to show you. So as you can see, this is SMC, but also using the confidence of the fair value of the Fibonacci level. Sorry, also having a more precise entry on where price is going to be reacting from. So if I was to be going aggressive right now, is either this as an entry and then my SL at the swing low. You would have seen me being safe, riding price back up into this point for safe TP because we do know price could be reacting from the 71 Fibonacci level, and then having this as my entry, and then the swing high as my SL. Price to take out this wind because this is the counter wind, right? And what do we see? We see a clean reaction. We got a clean trade, right? But then price came back. We tested again the sweet retest into the 89 Fibonacci level. The price went back down. Right, so even if you had this, you wouldn't have been stopped out. Right, if you were not unbreakable, you wouldn't have been stopped out and you would have gotten a clean risk to reward trade. So as you can see, this is how I use the Fibonacci levels on my trade. It looks a little bit complex and messy, but if you do watch the video carefully, you're going to be understanding how this concept is being used. And you can see clean and perfect. It's a very understandable concept, which helps you to know which part of your range you pay attention to. All right, so that's what we have for today. And this will be the conclusion for today's section. And if you do have any questions, you can leave that in the comment section. Do like and subscribe to this channel. So do have a nice day. Thanks for watching.